Yeah, welcome everybody. I'm having a conversation with Lucian, who has some previous experience in financial investments. And Lucian lives in London, and I also live in London, and we're just having a discussion about investments. This is not meant to be any kind of guide or advice about how you should invest. And many of the small investors listening to this, or people who are interested in money, will be aware that we are now more information than ever before is now available to anybody who wants to do any kind of even small investing. In the good old days, it was about things like pink newspapers like the Financial Times, no FD, no comment, that kind of stuff. But today, I don't really think that we need to worry too much about major media sources, although many of us do also listen to things like Bloomberg Radio, and we follow lots and lots of YouTube videos, and there's lots and lots of other people that we can follow on Twitter. I think that we both have our own experts that give us some guidance and advice, and many of them are trying to be futurologists, trying to see what the future holds. At this moment in time that I'm talking, we're emerging from this so-called global pandemic, and it's been a very exciting time for many wealthy people who've been putting money into stocks and shares. They've actually done very, very well. I mean, cryptos have done well, the stock market has done well, but right now there are worrying trends that certain sorts of stocks will start falling, and cryptos are probably, at the moment, they seem to be falling a little bit. So we're just having a quick chat about investment and investment strategies. So Lucian, would you like to tell me something about, just briefly, about your experience in the investment sector in London?
Yeah, so I've had many lives in my life. One of which was a career for about 4.5 years in investment, from I think it was 2005 to 2009. So I worked for two investment consulting companies, one called Watson Wyatt, which I think is now known as Willis Towers Watson, and the other was Mercer, still known as Mercer. And during that time, I was training to be an actuary, of which I got about halfway through the training program. And the job was as an investment analyst, and so I was fairly junior, but part of teams that were consulting to mainly pension funds about how to invest their money. But I was working on pension funds, both final salary pension funds, which are the massive funds which are investing in, they have very large pools of money, and also consulting to companies that were offering so-called defined contribution pension schemes, which is what most pension schemes are now, where basically the individual, the employee, has to make the decision as to where to invest the money, which was it was interesting, and obviously looking at it from that point of view obviously made me question where I was going to invest my money in the best way of investing the small amount of money that I had.
Now you were working at the business end of institutional investing, or at least you had some taste of institutional investing. Now, yep. Institutional investors have got almost like an unlimited pool of money to constantly invest on a regular basis, because they are effectively getting everybody's salaries given to them more or less, or wealthy people giving their money to them to invest as they please, or in regular, in a kind of subscription format, haven't they? I mean, in other words, employers and individuals are maybe on a monthly basis giving certain sums of money to this institutional investor, and then the institutional investor has to work out where to put that money, and they're constantly getting this money, so they have to work out where to put this money in this month, and then they get another stash of money the next month. They've got to work out where to put it, and it just carries on going like that. So they're always having this money, or this pool of money, pouring in, and they've got to work out where to put it to get the best returns both for themselves and their clients. Is that right?
Well, it depends what whose point of view you're looking from. And there's two different kinds of pension scheme. There's the so-called defined benefit, which was you probably more commonly known as final salary, The final salary pension scheme is, from a point of view of an employee, it's fantastic because you are guaranteed a certain pension when you retire. All the risk is with the company. The company has to provide you with a certain certain pension when you retire, which is related to your final salary. And so all the risk is with them. So if their pension fund is doing very, very badly, they're going to have to fill the shortfall somehow, in some way, either by getting better returns or by plugging the gap with more money from the company. Defined contribution, which is the most common pension scheme now. If you were to go join a company and join a pension scheme now, you are joining a defined contribution, and that is effectively just a pool of money that you as an employee build up in your, in inverted commas, bank account, and you can invest that however you like. The problem is all the risk is with you. So if you as an employee decide to stick all your pension money into a, let's say, an equities fund, well, I don't know, let's be put it all in the UK stock market, and that stock market plummets, then you've lost your money. There's nobody's going to bail you out, and that is the form of pension scheme that's most common now.
Do you have any?
Yeah.
Do you have any information about what governments used to do? I mean, like things like civil servants. Now, most civil service pensions are so-called defined ones, aren't they? Or they used to be historically.
Yeah, defined benefit. Yeah, and I think that's still the case. I think if you work for a government organisation or a council, you're probably likely, well, more final salary defined benefit pension scheme, i.e., the best pension scheme.
Now, how do governments try to guarantee that in the future they can give that defined money to the employers? I mean, to the.
Well, the thing is about governments, they can just they can just do the best they can. They in fact, they don't have to try as hard as a company, because think about it. If there's the government has a pool of money that it has to invest in order to pay the pensions of those people who are eventually going to retire. So they've got to do their best to invest that money and get as high returns as possible with a minimum risk. So they do the standard thing. A certain amount goes in equities, a certain amount goes in bonds, fixed interest stuff. Maybe, I don't know whether they probably do invest a tiny bit in property, a little bit in hedge funds and stuff like that, but it'll be a tiny proportion. However, if they make a mistake, if their pension fund plummets, it's not a problem. All the government has to do is just fill the shortfall with taxpayers' money. You know, they have a government effectively has access to a hell of a lot more money than a private company does, and a lot less scrutiny as to where the money's going. So a government defined benefit or final salary pension scheme is a good one to have, because you know that shortfall is going to be plugged by basically effectively taxpayers' money.
Yeah, so before moving the conversation on, I just want to ask you about something that I haven't ever understood properly, but maybe you can just say in your own words. What are these things called bonds? Are they like basically some kind of the government saying we're issuing a loan and we guarantee to pay it back or something, and other people can invest?
Yes, that's effectively it. Yeah. A bond is just a loan. It's just a loan that you make, and therefore you are receiving the interest. Yeah.
Okay, so who are the sorts of people who invest into bonds? Because most ordinary small investors don't really put their money into bonds, do they? They put it into things that they know about, like properties or the stock market. Is that right? They don't.
Well, that's true. In most cases, the ordinary person on the street is not investing in bonds, well, not knowingly anyway. However, if you invest if you have premium bonds, which is the kind of bonds where every now and again you can win some money.
Yes.
That's a bond. That is, you are lending money to the government. So if you buy £100 worth of premium bonds, you're effectively lending £100 to the government.
Yeah.
And the government in return is saying, thanks for the money. We'll pay you back whenever you want. And in the meantime, every now and again, we might give you a prize.
Yeah.
But the vast majority of money, which is being invested in bonds or effectively being lent to the government, is institutional investors. I would assume it's institutional investors. But as more and more people are investing in so-called defined contribution pension schemes, these standard pension schemes now, more and more people are probably inadvertently investing in bonds through their defined contribution pension schemes.
Now, we also hear a lot about, well, I've always been picking up things about Swiss bank accounts. Now, Swiss bank accounts are basically, it seems to be a dumping ground for lots and lots of money from wealthy people around the world. So, I think we have a common understanding. Is this the case that lots of wealthy people, including lots of politicians and world leaders and billionaires, like to put their money to Swiss bank accounts for some reason or the other?
I don't know enough about that really to comment. What is the question? Why are they doing that? Why are they investing in Swiss bank accounts?
Yes. I mean, is it the case? I mean, in your understanding, Lucian, it is true, isn't it, that lots of rich people do put their money into Swiss bank accounts as opposed to keeping it in the bank of their own country, as it were?
Well, I can think of two. I'm thinking off the top of my head here. I can think of two reasons. One is probably tax, something to do with tax.
Yes.
Minimizing the tax bill on the interest perhaps that they earn from the money.
Yes.
Obviously, there's what is the UK rate on interest, 20% or something.
Right.
And the other reason, less transparency would be a second reason. Less transparency, so it's more, less people snooping around the money you've got in the bank. Maybe there's a better, again, it's just a guess, but maybe there is a better guarantee scheme in Switzerland, so that if the bank goes bust, maybe the government is prepared to bail out the people who've got deposits. But that's a total guess.
Yeah. So, I mean, you see, this is the thing. I mean, one of the differences between the rich and the poor at a global level is that the rich have got access to investment opportunities that the poor don't. And this includes things like Swiss bank accounts. But I think that these investment opportunities are now more available to more people of the world than ever before. And I was saying that we've also got access to more financial information than ever before as well. But obviously, one of the downsides of this is that life is becoming complicated and there are too many choices. And people might end up doing dangerous things with their money because that's the best information that they had access to, and that information hasn't really been vetted adequately.
Yeah, I'd agree with that. I think, finance is becoming, so many financial products are becoming available to the ordinary person. Like you say, the downside is it's so complex, and also you have to be pretty tech savvy as well, don't you? Especially if you're investing in crypto.
Yes.
You've got to be pretty tech savvy.
Yes.
And if you're not, and you still manage to somehow invest, you're probably running several risks. Like if you keep all your money in an exchange or whatever, or you keep it in a very insecure wallet, you run the risk of losing your money. So yeah, it's you're right. It's so many more financial products available to people, but the downside is the complexity and the fact that you need to be pretty tech savvy these days.
Yeah. So people talk about if you had put about £5,000 into Amazon in 1997, now you might be like a multi-millionaire. But I think maybe everybody's got to have their own way of controlling or determining where they should put their money. And I think that one of the things that many people are concerned about is the environment and ethical investing. I know that this is not an area that you specialize in, but I mean, you have your own ethical standards. So you, for example, you're the vegetarian.
Yeah.
But you're not a vegan.
Right.
Yeah. So, I mean, companies like Amazon, it started off by selling books and people were getting sucked in, including myself. It was such a lovely company just selling books, and it's one of the greatest book emporiums in the world. I mean, you can write reviews. But then they started selling practically everything. And I think that the problem of selling everything is that they're also ending up selling things like tuna fish and wild animal parts and shark fins. And they're still doing this. And if I was a Jain, and I was worried about the consequences of what my money is doing to the world, like destroying rainforests or adding to plastic pollution or destroying wildlife. Then supermarkets and companies like Amazon, no matter how attractive they are, aren't necessarily my first port of call, because they do deal with lots of destruction, especially of wildlife, which is an area I'm concerned about. I know that you don't really necessarily go into this kind of ethical investing, but do you have any view about this, or do you have a feeling about this kind of ethical investment? Do you think it could be more important in the future?
It's a good question. I just feel like most people who are investing, the number one priority is return, isn't it?
Yes.
Is a high return. And I think people generally speaking are willing to turn a blind eye to the ethical aspects of it, and they're lucky in a sense, lucky in inverted commas, in a sense, because so much of investing is kind of quite obscure. What you're really investing in at the end of the day is quite obscure, is obscured by the various layers
Yes.
of the investment product.
Yes. Yes. Yes.
So, I mean, a good example would be, do you remember there was a scandal a few years ago that it turned out, the headline was that Comic Relief had been investing in arms, in
Right.
companies that sell arms to African countries or something like that.
Yes.
There
Yes.
was a big scandal. How could Comic Relief possibly invest in those sorts of companies?
Yeah. Yeah.
But what was actually going on, if you looked at it, was that Comic Relief had investments in, I think, a FTSE 100 a FTSE 100 fund. So it was like an investment tracker, FTSE 100 investment tracker. So it was just investing in all the FTSE 100 companies in proportion to their market cap.
Yes.
So and within that was BAE Systems, or one of these companies, one of these big arms companies, or defense companies as they call themselves.
Yes.
So it wasn't really an intentional investment in an arms company. It was just a kind of sort of accidental by virtue of being in an investment tracker fund.
Yeah.
So I suppose the point I'm making is that, yeah, investors' top priority is returns.
Yes.
And most investors are not going to be looking hard enough for their investments to even know whether they're investing in some company which is counter to their own ethical beliefs.
Yes. Yeah. Yeah. So in the 80s, the one place that you were advised to recommend your put your money in was in property, but the property option is not open to most people because property is simply far too expensive, and that's why people like possibly ourselves and some of the people who are listening don't necessarily invest into property, because even if they wanted to, it's too expensive, or at least that's the impression. I mean, there are ways of investing into property through collective systems that might work, but for most people, it's slightly off color, isn't it?
Yeah, it's pretty difficult, isn't it, to invest in property if you can't afford a house or a flat. But there are these pooled investment funds, aren't there? Are they called REITs, real estate investment trusts or something?
Yeah.
So it is possible to invest in real estate property funds. It's not something I don't think I've ever done that, not with my pension scheme, but it is possible to access them if you really want to access that asset class. Yeah.
Yeah, and properties under the present circumstances, properties are pretty secure, aren't they? Because there's always a constant level of immigration, and there's always these people wanting to buy houses. And even if there wasn't,
another point I want to make is that I think those real estate investment trusts, those property funds, they tend to be commercial property, so that you're not. It's a different kind of property, isn't it, than
commercial,
residential?
Yes. Yeah. And when I was talking about property, I mean, apart from worrying about our own personal property, that if we're lucky, we might have it. Although in some countries, there's no compulsion to have your own property, because the de rigueur method of having a dwelling is to rent it out from the government or some state-backed organization.
Yeah.
That's how most people seem to live. And so they still got some spare money, hopefully, to consider investing in. So anyway, we've got there's so many options now, and I think that some people take matters into their own hand and basically want to control how they invest their money themselves rather than giving it to an ETF or to some fund manager. What do you think about the luxury of using fund managers compared to doing it by yourself? It's often much more risky, isn't it, doing it by yourself compared to giving it to a fund manager or some kind of investment company?
Yeah, yeah, certainly more risky, isn't it, to do it yourself? I mean, my own personal preference is to use pooled funds and index funds, so-called tracker funds, um, because of the increase in diversity you're getting. So a fund like that get much more diversity than if you're picking your own stocks. Um, but on the other hand, if you're you can get lucky picking your own stocks, and if you're picking your own stocks, you're increasing your risk and potentially increasing your return. So it's you pay your money, you take your choice.
Yeah,
Um,
yeah, yeah,
but my own personal way of doing things is I'd rather have access to the rather have I think of having in terms of having access to the asset class rather than individual stocks. So uh, I'd rather think in terms of having access to, let's say, UK equities, UK shares, um, rather than going in and doing tons and tons of research and figuring out which of those UK shares I should be investing in. I guess because all shares, let's say FTSE 100 shares are so highly correlated anyway.
yeah,
So
yeah.
chances are, if you pick a random five, they're going to go up and down very very similarly to another random five stocks.
Well, I do notice this quite a lot actually with my own portfolios. I noticed that practically all the companies in a series follow the same kind of pattern.
Yeah,
On a
yeah.
daily.
Looking at the, I mean, just in the last few days, we've had this plummet in the price of cryptos. I
Yes,
mean, they've all gone down about, as we speak, they've all gone down by about 40%.
yes, yes.
Without, um, yeah. So they're all very highly correlated.
Yeah. So, seasoned investment, or at least people who dabble in investing, yeah, like yourself, Lucian, we always hear people saying, yes, yes, but we have to worry about the long term. We don't really worry about these things that are happening in the short term. We kind of worry about the long term and we invest for the long term. But what's the definition of long term? Is it 5 years? Is it 10 years? Is it 20 years?
It's a good question. So whenever you want it to be. But yeah, I would say,
I mean, within the span of a human life, obviously.
yeah,
Yeah.
obviously, yeah. I would say at least 5 years. Yeah,
Okay.
but
Okay.
it depends on your point of view. But um, if you're starting out in your career and you want to build up a big pension pot for when you retire, then let's say you start your career at the age of 21 and you retire at, I don't know, 66, or what's that, 45 years. So your time frame is 45 years. Um, yeah,
Yeah.
yeah,
Yeah. Yeah. So one of the interesting things right now, uh, Lucian, is that at the moment the world is being dominated by the tech giants, the so-called FANG companies. So you've got Facebook, Amazon, Apple, Google, and I don't really know if there's an S at the end of it, what the S might stand for. But there are the number of tech giants that seem to be ruling the world, and the total value of these tech giants is apparently about $6 trillion, which is more than the amount of free dollars in circulation, which is something like $5 trillion. And obviously, these FANG companies have a huge amount of say about what's happening to people's money and how to direct it. They can control advertisements, they can control politics, and they can even control things like cryptocurrencies and the internet up to a point. And so I just picked up, for example, that people are trying to develop even different systems of the internet, which is, for example, based on cryptocurrencies rather than on tech companies. But these are two areas where people have been putting quite a bit of money: tech companies, the tech sector, and cryptocurrencies. So these two areas have been quite popular amongst amateur investors. And there's been a recent trend that more and more people are becoming interested in cryptos, although they remain mysterious to many people. And most normal people, sensible people, level-headed people these days, and I picked up an example of it yesterday, they still mock people who put money into cryptocurrencies, and they say, oh, you're just being such a fool. It's got absolutely no underlying value. Cryptos are worthless. Is this true, or what's the case against that kind of argument?
What is it? Is it true that
is it true that cryptos are inherently worthless, and it's not really a good thing to put your money into cryptos?
Well, I mean, if you're going to use that argument that you shouldn't invest in cryptos because they're inherently worthless, they're just ones and zeros on a computer system. Well, you could use that same argument that gold is inherently worthless. I mean, gold. What is gold? It's just a shiny metal. It doesn't have any use really. Much more than any other fairly precious. Fairly.
I mean, Lucian, if I can just stop you just briefly. I mean, it has been pointed out that gold is useful in things like jewelry and in wires, electrical wiring.
But jewelry isn't useful.
Well,
I mean,
it's got a function. It's got a function. It's basically involved in things like romantic interactions. So to that extent, it has its uses. And secondly, also it's used in circuits.
But so is copper. Copper's used in circuits a hell of a lot more than gold is.
Yes.
But it's not more valuable than gold.
That's right.
Gold is given its value because everybody agrees to give it value.
And it's also scarce, isn't it? I mean, let's be honest, it's scarce. It's scarcer than copper. Yes.
Yeah. So what Bitcoin's done is Bitcoin has created a situation where everybody has chosen to give it value, and it is also scarce because it has been designed to be scarce through the protocol.
Yes.
So it's an electronic mimic of gold. Both of them are pretty have very little value innately. I mean, gold, okay, you can make yourself look pretty, but you can make yourself look pretty with other shiny things.
Yes.
People, over the course of many thousands of years, people decided, this shiny metal will give this value, and we'll use it as a medium of exchange and a store of value. And people have decided to come up with an artificial version of it, an artificial electronic version of it, which they call Bitcoin.
And theoretically, Bitcoin is more portable than gold, isn't it? I mean, it's not like a lump of gold that you have to keep in a bag. I mean, most people have their crypto wallets on their mobile phones, so you can take it around the world with you, and you can distribute it around the world as well, can't you?
Yeah. It's great. It's great for that. Yeah, sure.
So I've been recently trying to think of some of the advantages of crypto, regardless of its inherent value. So number one, cryptos are divisible into tiny amounts, unlike stocks, which are priced at the unit of the stock. It's open 20.
And unlike gold.
Well, you can split up gold into tiny bits, can't you?
But you'd struggle to split gold into a £1 piece of gold, as in £1 sterling.
Absolutely.
It'd be a little shaving, wouldn't it?
Gold is not as divisible as cryptocurrency. Cryptocurrency, the market is open 24/7. Unlike the stock market, which is open at designated times around the world. The whole world has access to cryptocurrencies. I mean, many people in many countries do not have access to buying FANG stocks, for example. They can't be buying Apple stocks or Google stocks on a whim. But certain people in places like Britain and America are exposed to these American companies and can buy them quite easily. But people in poorer countries have to go through all kinds of complicated systems if they actually want to get hold of Western stocks. So cryptos are available to everybody. So that infinitely divisible, they can kind of like global, and it's open 24/7. The only problem is that there's too many of them coming up now.
Well, is that a problem? I don't know. It's a problem if you invest in the crappy ones that come up, or the ones that come up as a joke and then they come and go. But it's not a problem. It's not. I mean, does the introduction of new hundreds of new cryptocurrencies, does that affect Bitcoin or Ethereum or the big players?
Sooner or later it could, Lucian. But actually, Lucian, you do have a point, and I do take it from you. I mean, in another way of looking at it is that the crypto at the moment, when it comes to crypto investing, we're still only talking about 5 or 6 major cryptos right now. It depends on whether you take the top 10 or the top 15 or top 20 cryptos into account. But we're effectively dealing with a top 20 pool of cryptos. Whereas when it comes to companies, they're practically infinite. There's infinite numbers of companies, including subsidiary companies. Like even if Apple is a gigantic company, there are still many companies that are tied up with Apple that you can buy the individual shares of those companies instead of buying the Apple shares. That's also, for example, chip makers. And chip maker companies are also servicing the tech sector, so you can buy shares in the chip companies. So what I'm trying to say is that when it comes to cryptos, if cryptos are actually doing very well and if it's seen as a good model, then that's only a few to choose from. And if large numbers of people are putting a lot of money into those few numbers of cryptocurrencies, then obviously cryptos are going to appreciate a lot faster than many of these companies. Would that be the case?
Yeah, I suppose so. Yeah.
I mean, does this explain why Bitcoin is regarded as one of the fastest rising assets of all time? Apparently, it's gone up by 5 million times since its release. Some kind of astronomical number.
Yeah, sure. Well, I guess in a sense, it's kind of gone up infinitely, hasn't it? Because it started off as being of no value at all. When it was invented, so it's kind of gone up infinitely.
Yeah.
But yeah, I mean, I guess it's really in the early days, isn't it? I mean, if you're heavily into crypto, and you're watching crypto videos every day and you're reading books and you're investing and trading and all that, you feel like the whole world is crypto. Everybody's doing crypto. It's so old. In the last year, Bitcoin's gone up 4 or 5 times or whatever it is.
Yeah.
It just feels like it's kind of everything's happened and everything's done.
Yeah.
But actually, when you take a step back and you look at how many people actually do, some people haven't even heard of Bitcoin.
Yeah.
And if those people who have heard of Bitcoin, they almost certainly haven't heard of Ethereum. That's some sort of sci-fi thing, isn't it?
Yes.
So yeah, what's the point I'm making? The point I'm making is it's still early days, really early days for Bitcoin. Sorry, for crypto in general.
For crypto, yes.
For crypto. So it's still really early days. So yeah, it seems to me, likely that it's really gonna appreciate massively the more and more people, the more and more mainstream it becomes.
Yes, of course, there are signs of that happening already, Lucian.
Yeah.
So I think that people are finding more ways of using crypto, and the ways that I can think of right now, apart from the fact that Bitcoin is digital gold. Ethereum has been compared to digital oil. So it's one of the things that Ethereum has been used for is so-called non-fungible tokens, NFTs, which is selling things like digital art. Also, it's used in something called DeFi, which I don't really want to go into, decentralized financing. Last but not least, many cryptos are used as stable coins, which are intermediaries between fiat currencies to transport money from one individual in one country to an individual in another country. And there are these stablecoin networks that are coming up that translate your money if you want to send it from one place to another. And they take your money very, very quickly, very fast, without the need for intermediaries like banks and lawyers and things like that. I mean, apparently a lot of this money is programmable as well. So you can kind of do away with lots of that middle stuff like banks and lawyers, although I actually think that there'll be another bunch of middle managers to take over.
Yeah. Well, it's getting more and more complex, and more money is being decentralized, taken away from the big authorities, the state control and so on, and the banks. Which is a good thing, I think. But I suppose it points to probably the biggest threat threat to cryptocurrency, and that is state intervention.
Yes.
And what is probably the biggest reason for this recent plummet in the price of crypto? And it's probably state intervention, isn't it? In China, China saying
yes,
cracking down on the exchanges. You know, they haven't been able to ban crypto, but they've made it extremely difficult for anybody to invest in it. So yeah, it seems to me that that's the biggest threat is state intervention, cracking down on it in one way or another, and maybe also competition. Maybe if governments start releasing their own, what do they call them? Central bank digital currencies.
Yeah, CBDC.
Yeah, if they start introducing these and their own kind of sort of in inverted commas blockchain stroke digital stroke decentralized, you know, using these words, their own digital currencies, then maybe they will actually end up being you know, the new currency, the new way of doing things, and it actually marginalizes the truly decentralized cryptocurrencies. I don't know.
Yeah, but I mean, the cryptos are carving out a role for themselves. For example, stable coins. I mean, there's Ripple and Stellar, which are probably, and various other coins that are acting as stable coins. So I have noticed how easy it is to send money abroad now using various apps, like certain apps that are available. And I feel that these apps are using stable coins to send, which are kind of a cryptocurrency network to transfer money from A to B around the world now. I think that sending money around the world, thanks to cryptos, has never been easier.
Yeah, sure. I mean, if you're in the crypto world, yeah, and you can do crypto and you understand it, and you've got all the apps and so on. Yeah.
What about things like Ethereum? What do you understand about programmable money? I mean, I've got my own idea about what programmable money is, but what do you understand about programmable money?
I don't really know. What do you mean? No, what do you mean by programmable money? Then I'll tell you what I think.
Like smart contracts. You know, they're doing these so-called smart contracts. They have
that's not money though, is it? That's not programmable money.
Well, apparently you can build in contracts into Ethereum. You know, you can use the blockchain to enforce contracts. I don't really.
Okay, so it's programmable money transfer. Would you say?
Yeah, I think
programmable. The programming of money transferring from A to B.
Yeah,
triggered by some event.
Yes, and
some condition being met.
Exactly. You can stipulate what the money is for, or how the money. Presumably, you can put terms and conditions on the money, or something like that. I mean, they build in a contract into the money. Yeah. It's not just money; it's just a contract connected with the money. Is that right?
Yeah.
Yes.
Yeah. That's my understanding. Yeah. So it's what do they call them? Digital? Is it digital contracts?
Yeah. Well, yes. Yeah, digital contracts, one way or another. But maybe there's something more complicated word to go along with it.
Yeah. There is a phrase, and I forgot what it is. But yeah, no. I mean, it sounds. I just haven't looked enough into that, but it sounds. Yeah, my hunch is that that's going to be big, really, really big.
Yeah. Yes, I mean, there's a lot of speculation that this is going to cause certain cryptos to explode in value, despite obviously setbacks. So I think that we're at the moment of a transformation of finance. Some people say, for example, that Bitcoin will be flipped over and another currency will take over. So at the moment, people are wondering if Ethereum is going to take over from Bitcoin, and they're calling that the flippening. But there's no evidence that the flippening is happening anytime soon. Do you think that a good way of investing is to have a certain amount of money in crypto and a certain amount of money in stocks, if you have enough money to do that kind of thing?
it all depends what your investment goals are. I know that sounds like a bit of a cop-out answer, but what do you want to achieve?
I think that I think
Yeah,
most people are trying to
depends
maximize
what you
their
want to
return.
achieve, what risks you're prepared to take.
Yeah,
How do you see the future?
yeah. Well, you
Okay,
see,
yeah, fine, but you have to you have to have a vision of what you think the future is going to look like. I mean, if you think there's going to be an apocalyptic future, if you think there's going to another, COVID-20 is going to come along and wipe everybody out,
yeah,
and wipe out the stock markets, then
yeah,
it's not a very good idea to invest in stock markets. You may as well put all your money in crypto if you think that that's going to keep its value in an apocalyptic scenario. I don't
yeah,
know. Maybe it would be the other way around, but whatever.
yeah.
You have to think about how you see the future.
Yeah,
So
yeah.
from my point of view, I see a big future for crypto.
Right.
So it makes sense to have a good portion. I mean, so if you also believe that, it makes
Yeah,
a good sense to have a good portion of your portfolio in crypto.
yeah,
If you think that the major stocks are going to hang around for the next, however long your time horizon is, let's say 15 years. If you think Apple's still going to be there and Amazon and so on, then it's worth having a proportion of your portfolio in those things. Um, but I think maybe, okay, I'm just going to pluck some numbers out of the air now as
yeah.
a kind of a default, let's say a default portfolio that you could tweak.
Yes.
You could have, let's say, a third in stocks, sorry, a
Yeah.
third in equity shares,
Yes.
a third in crypto,
Yes.
and then a third in fixed interest, so bonds. Let's say
Yes.
bonds.
Yes.
And the reason for that is a kind of uh, an insurance, almost an insurance.
So, so,
Um,
so,
yeah,
Lucy, let's get this clear. When you mean a third, what you probably mean is that suppose you have got £10 to invest,
yeah,
that you put £3 and 33 pence into stocks, £3 and 33 pence into cryptos, and £3 and 33 pence into bonds.
yeah,
Because another way of the problem with looking at it in terms of apportionment is that suppose you start off with one third here in A, B, and C. What happens when one of those sectors does phenomenally better than any of the other sectors and comes to dominate? So suppose your £3 33 in a stock market changes into £7 in a short time, but the one you put into cryptocurrencies becomes £100. Uh,
mm.
well, I mean £18
Well,
or £20.
yeah.
So
Well,
so
then you would rebalance. You would rebalance back to a third, a third, a third.
oh, so you would
Uh,
actually sell that crypto and take it back into the stock market, would you?
so you're back. So you're back in a third, a third, a third. And by the way,
Okay.
this third, a third, a third. This is just off the top of my head.
Right.
You
Right.
could obviously adjust depending on your view, depending on your time frame, your view of how the future is going to look, and so on. But let's just say as a default. So yeah, let's say that happened. Crypto goes through the roof. You've now got tons of money in crypto and hardly anything in the other two. Yeah, you would
Yeah.
then rebalance, unless the fact that, let's say, crypto has done so well, unless that has changed your view of the future. Because
Yeah.
if it has changed your view of the future and you now think that crypto is, well, it could be that you now think crypto is way overpriced and
Yes.
it's not going to do much better.
Yes.
You may want to change it now to
Yes.
10% crypto,
Yes.
let's say 60% equities,
Yeah.
and what's the remaining 30% in bonds, because maybe
Yeah.
your view has now changed.
Yes.
But as long as your view remains the same, you would maintain that balance, a third, a third, a third,
Yes.
in our hypothetical scenario.
Or you might say that, well, I'm going to be having some people, I mean, like James Wang, who's available on YouTube at the moment. He says he's got 70% of his allocation into crypto and 30% into equities.
Yeah,
Uh, so you've got to kind of work out your rough percentage and see how they're doing, and then shift money sideways accordingly.
right, right. And James Wang, is it Wang or Wang?
Wang. Yeah.
Wang.
Yeah.
He obviously, his view is that crypto is gonna be massive in the future, and
Yes.
therefore it's worth putting the vast majority of his portfolio in crypto. And he's obviously prepared to take a risk as well, because he's not got any money in, well, as far as he says, he's not got any money in bonds or cash or property. He's all in with very, very risky assets.
Yes.
So he's obviously, he's prepared, he's able to weather the storms.
Yes.
Some people aren't able to weather the storms. Maybe their time horizon isn't long enough,
Yes.
So they have to have they have to have a fair proportion of their funds in safe stuff, like cash and property and bonds.
Yes. So Lucian, and you're allowed to be slightly eccentric in your opinions, but at the moment you didn't like any. If you take any piece of world history, you can say, well, we're at a very interesting part of world history, where we're seeing these major changes happening. I mean, they could have been saying this in the middle of the Stone Age for all I care. An interesting time. I mean, the mammoth is going extinct right now and whatever. So what I want to ask you is, where are we now, and what are the sorts of things happening, and where do you think we should be putting our money? And maybe I should just fill up before I say some more, because obviously most of our audience don't really know where we're coming from. Now, I have about, at the moment, roughly 50% in equities, 50% in cryptos, and both of them have been doing relatively well, especially during the pandemic. Surprise, surprise. But many people are really worried about what the future holds and what's going to happen to the tech companies. And everybody's talking about inflation and inflation going up, and suddenly the stock market collapsing. Or alternatively, they talk about the cryptos being muzzled by governments or the FANG companies, the tech giants. Or some people talk about the end of the world is nigh, and that's actually a trope that we mustn't take that seriously. Where do you see where we are?
Yeah. You're asking me to predict the future.
I'm just asking you to give me a feeling, actually.
Yeah. I think in terms of the economy, I think we're in big trouble. Personally, I think we're in big trouble.
Right.
I think the coronavirus situation has completely screwed everybody, screwed all governments and many ordinary people. I think the stock market is artificially high. I think it must be a bubble. I'm not an expert, but this is my feeling. It's a massive bubble, and it's over seven. The FTSE 100 is over 7,000, which is pretty much pre-pandemic levels.
Can
the economy has
that?
been decimated.
Can you repeat that for the benefit of myself and anybody else listening? What did you say is 7,000?
Yeah. The FTSE 100 is
100. Yes.
Yeah, is at 7,000, which is sort of pre-pandemic level.
Yeah.
Maybe slightly less, but the economy is. I mean, the government is in massive amounts of. Well, I'm talking about the UK government, but it's the same in the States as well.
Yes.
Massive amounts of debt, money that's been borrowed in order to pay all this furlough and all this stuff, which is just billions, and in the States trillions of dollars.
Yes.
So I think we're in massive economic trouble, and I think it's been cleverly camouflaged, cleverly disguised, like as if there's not really a problem. Everything will be okay, and everything will bounce back. I don't think it will do.
Yeah.
I think it may appear okay for a while, and then it's gonna all of a sudden the problems are going to appear. So anyway, so to cut a long story short, I think at some point the stock market is going to crash. I really think it's going to crash.
Right.
To reflect the state of the economy.
Yeah.
I think crypto is going to keep doing better and better, unless governments come in and really try and crack down on it.
So Lucian, if I want to add something here, what's happening especially in third world countries right now is that their currencies are collapsing like nine pins.
Right.
And those people are going to be absolutely desperate with their money, wondering what to do with their money when it's kind of becoming devalued in no time at all.
Yeah.
So under those circumstances, wouldn't many of these people, especially the more intelligent and the better informed, be diverting more of their money into cryptos, where they can start using cryptos as another alternative kind of money that actually holds its value better than their own local currencies?
Yeah. Well, who am I to say? I don't know about any given person's local currency, but yeah, I mean, generally speaking, I would say they're better off in crypto. they're better, or they're even better off in what is it, UST or Tether, these cryptos which are tethered to the value of
digital dollars.
dollars. Yeah. So yeah, they're probably better off in those, to retain their value.
Yeah. So we could be seeing local currencies being replaced up to a point by cryptos. Would you say?
Yeah, as long as the states of those local currencies don't ban crypto.
But I mean, it's very difficult to ban some of them, isn't it? I mean, you can't really stop people from
Well,
saying,
they can
I have a loaf of bread, and then you send me some money over the internet.
Yeah, well, but that you're assuming that they're already in crypto at that stage.
Right.
But what if they don't own any crypto yet and they want to buy some? Who do they buy it from? Well, if the exchanges have been banned,
right.
How are they going to on ramp, to use the jargon?
Yeah.
So that's a potential problem. It's great in theory. Crypto is great in theory as a way of banking the unbanked, again, to use the jargon.
Yes.
But it's only of any value if you can get into it in the first place.
Yes.
Yeah.
Well, so Lucian, I think that we're in a good place physically. We're in London right now. I'm speaking from London, and London is actually still quite a prosperous global city. And we're also at the kind of one of the epicenters of global finance here, alongside many other countries in the world, around the world. I think it's an exciting time to be an investor. We have so many choices, so many people asking to be listened to, so much advice around, and I think we have personally made our decisions about where we want to put some of our money, but we're constantly upgrading our own knowledge bank to see if we can do any better. But it's just very interesting. I think that at the moment when cryptos are taking over, and the stock market is doing all right. So I think maybe I look forward to at a personal level getting your feedback and knowledge in the future. So it's not like the end of the world quite yet, is it?
Not quite yet.
Quite yet.
But we've got some big shocks ahead. There's no doubt about that in my mind.
Yes.
Some big shocks ahead. What exactly they are, don't know. But there's going to be some big events.
Right. I think we could discuss that in the next program if there is one, personally or publicly. But thank you very much for your time, Lucian.
Oh, thank you very much. Thanks for having me.
It's been a pleasure talking to you. Thank you very much, and good luck with your investments, as well as wishing myself some luck as well.
And you, good luck with yours as well.
Thank you. Thank you.
Great.
Goodbye.